good time to bring in our technical experts then. Manav Chopra, Head of Research for at Trade Bulls, and also Amit Gupta, AVP and Head of Derivatives at ICICI Securities are here with us. Good afternoon to both of you, and thanks a lot for joining us. Manav, let me come to you. Markets have recovered almost all the losses that one saw in yesterday's trade, or rather in the last two sessions. What should one do now, people who missed out, taking any long positions at lower levels?
See, the overall momentum for the markets definitely remains positive, and the markets are in a very strong trend since it has rallied from the recent lows of 10,600. There has not been any deep correction. In fact, there has been few days of consolidation whereby the markets have eventually seen a breakout on the upside. I think the similar formation happened yesterday and a few days back, whereby the markets did see some sort of a consolidation, a short pullback rally, and then eventually looking at the overall trend analysis, I think we are definitely heading higher. On the immediate basis, 11,200 will be the important support zone, and which these levels are likely to be held for the near-term perspective. One can maintain a buy for the Nifty at the current levels with a stop of 11,200, expecting the levels of 11,500. Even for the Banknifty, after a good consolidation breakout that has happened on the higher time frame charts, I sense this sector has still much of an upside to go from the current levels also, specifically looking how the PSUs and the private banks are showing the momentum, and specifically led by the PSU banking space. I won't be surprised to see another 400-500 points rally coming in the banking space. Keeping that in mind, 27,450 is the important support zone, and that will be our stop loss, and we expect an upside target on the immediate basis of close to 28,000.
Amit, good afternoon to you as well. What is your approach to the benchmark indices at this point in time?
See, first of all, the best part is the volatility in Indian markets has remained lower. Now, we have seen number of adverse news flows from the outside world. In fact, the newly one of trade war between India and US and China. If you observe what is happening on the currency front, Chinese currency has depreciated very fast, but our currency has remained quite resilient. I mean, it has remained within 68 to 69. So I think if such kind of resilience continues, which is very much likely, because if you look at the FII's outflows in the last month, it has reduced significantly in comparison to May or the previous month. So our sense is, if this trend continues for some time, you will see good sustainability in Nifty above 11,000, which is the highest put base, along with this decline in volatility. That means the put writers are very active at this level. And eventually Nifty can move higher towards 11,500 or 600 levels. But the best part, what may come out, is the recovery in the underperforming stocks. So far, mid cap and small cap, which have remained quite underperformer, almost 20% fall in mid cap and 28% fall in small cap we had seen. So that recovery can be seen now amid the results which have come out. If you compare this quarter results, I think this is one of the best in the last 6 quarters. So that means this recovery is very much due in those underperforming stocks, and with rupee little bit depreciating or above 68, I think IT and pharma, you can't take away the charm from them. So they may also see some recovery, some short covering kind of scenario, and which is helpful for the markets also, because they have good weight in Nifty.
Okay, that's the view coming in on Nifty, Bank Nifty. Just want to highlight few stocks. The banking stocks are doing pretty well. Axisbank, Yesbank, Kotak Bank. Pull up the intraday charts of all these stocks. Kotak Bank, I believe has recovered, because during the day we'd seen some bit of mild uptick when it opened, but right now Kotak is sitting at days high with gains of almost 2.5%. Remember, we spoke to the management earlier during the day regarding the dilution plans of bringing the stake down to 20% as per RBI mandate. They've chosen the other route of issuing preference shares instead of equity dilution, which is also giving some room to debate, because that does not carry any sort of voting rights. But other than that, Inox, Leisure and PVR are the two other stocks which have been doing pretty well since the morning trade, and that's precisely on back of PVR news, where they've renewed their contract with Book My Show and also Paytm. So good gain seen for both these stocks. But Manav, I'm going to come back to you and take your top picks for this afternoon. Which are the stocks that you're betting on?
Yes, my first buy call is on Yesbank. The stock actually has been in a very good uptrend, and recently, after a good corrective decline from its recent peak of 390, the stock observed a 38% retracement of its recent rally, and definitely provided a good margin of safety near the important support zone, and a good breakout on the intraday charts with above average volumes indicates the short-term bottom is in place, and eventually the stock is likely to make a series of new highs. So since the overall trend is still intact, we recommend a buy into this with a stop of 360 for an upside target of 400. My second call is buy on L&T Finance. The stock has seen a good breakout after a good sideways consolidation pattern, and since the overall trend is still intact and the prices on the weekly charts are still indicating much higher levels to be achieved, the volume breakout also further indicates a good bullish setup into this. It has a very strong support at 174 on the lower side. We recommend a buy into this with a stop of 172 for an upside target of 195.
Okay, and Amit, how about you? What stocks are you betting on today?
So one is India Cement, the other is Lupin. I mean, we have bought call option actually of both of these stocks, because if you look at the implied volatility, as I said about the overall market volatility, it has remained lower, and particularly of these two underperforming stocks, the implied volatility has been very low. And now what we have started observing, just because of the short covering in the future space, that the IVs have started moving higher. So they were at mean minus 2 sigma level almost in the case of India Cement, and almost mean minus 1 sigma in the case of Lupin, because Lupin in the last series had seen a reversal, and then it came down to 800 again. So my sense is, from these important support levels, if IVs of these call options start moving higher, you will see good move in the underlying also as a result. So 900 call option we have recommended to buy in Lupin, and 120 call option of India Cement. Now if you observe particularly Lupin, because last time Dr. Reddy results were not good, but it had seen some decline. So if Lupin results, even if they are flat, I think the stock can see some reversal from here. It can again move towards the recent high of 945 or 950. And from the cement space, we have seen one by one good results coming up, starting from ACC and Ambuja, and then Ultratech Cement also before. And my sense is, the same boat you can keep India Cement also, like Lupin. If the results are even flat, I think there may be a good scenario that this stock also can witness some short covering. So in that case, it can move towards 130 or 132. So buying a call option with a low volatility, that means the premiums are relatively lower. It may be a good bet actually for August series.
Okay, those are the top picks coming in from our technical experts, and it's very rare that we shift focus in the last hour of trade from Indian equities to global one, but it's currently the apple of everyone's eyes. The tech giant became the first US-based company to see market cap cross the magical 13-figure mark on Thursday. The iPhone and MacBook maker has also had its scares along the way, from going into near oblivion to coming around in 2007 to touch the new high last night. Alex Matthew joins in with the comparison, which shows just how big the company has grown. Alex, first of all, thanks for gracing the show. I think this is your first time on Countdown.
My debut. It's a good day to make a debut. Markets are up. Apple has reached the $1 trillion mark, but
Are you using iPhone or MacBook?
I am using, but look, I'm not saying that you should buy anything. I'm not saying anything here. The point that I'm trying to make is that sometimes, especially because we're flooded with numbers every day, we tend to let these things go. And what really makes things clear when you're talking about the scale of $1 trillion is to make a few comparisons. So let's do that. Let's draw a few comparisons. The first comparison that I'm going to make, and I'm sure that you could take several countries, but these are several large economies in and of themselves. It so happens that the GDPs of the individual countries that you see mentioned on the screen, and that's Netherlands, that's Saudi Arabia, Switzerland, Argentina, well, Apple's market cap is more than each of these countries' individual GDP. If that wasn't enough, let's talk about the next slide. Okay, let's talk about a bunch of countries that you can see over here. These are all South American countries. You'll see 9 on your screen. All of them put together, their GDP is not as high as Apple's market capitalization. And the final comparison that I have for you, and this list will include names of several people that you would probably know. Right from the top, you see Jeff Bezos of Amazon, you see Bill Gates, you see Warren Buffett. all the way to the bottom of the screen where you say Mukesh Ambani, who's a household name. Well, the numbers that you see alongside them, those are the net worths of these men that you see over here and the woman on the screen. Well, combined, all of them put together, just about is higher than the market capitalization of Apple. So guys, just to put things in perspective, that's how big Apple has become.
Well, that is certainly a very interesting chart you put there, Alex, and of course a lot of details out there too. Thanks so much for joining us and giving us those details. Of course, we have a bunch of companies which are not too far behind, but well, Facebook has of course lost out in that race. When it's in fact gone in the opposite direction, and of course Apple on the opposite end of things. So well, we're going to continue to track that snake race as well. And well, plenty more to move in, but I'm going to quickly address one or two stocks before we can move on, and I do want to talk about Page Industries. If you can pull that up right now, it's looking at marginal movements. It's come back below the mark of 30,000 at this point in time, and of course it has made a lifetime high very recently. It's showing a lot of strength overall. Amit, can I come to you on Page Industries and take your view here? How are you seeing trade on this one, and perhaps levels that you can tell us about when it comes to trading in Page Industries right now?
See, from the April segment, if you see, Page Industries, once it had seen a decline from 26,000 to 18,000. Now from there, we had seen a very significant increase in the open interest in the stock in that particular fall, and that was clearly the short build-up. And once it moved from 26 to 28, it spent some time near 28. I saw some averaging of those because people were not ready to accept the move to continue. And that is why I think there is a very large room in Page Industries to keep on moving up, just because these short positions will be closed. And that is what we are going to see in the August series. I think from 30,000, it can go to 32,000 or 33,000 also. So you should remain positive in the stock. Keep your positions intact. If somebody is already long, he can keep a trail, and such kind of trades he can do to ride that particular move. So it is a good short covering candidate for the August series.
Okay, that's Page Industries for you, but let's get some technical checks going for a couple of these private banking stocks that we highlighted for you. Manav, I'm going to come to you. Any of these stocks, Axisbank, Yesbank, and for that matter, Kotak Mahindra Bank also, which is sitting at days high, would you take any fresh trade on any of these stocks?
Yes, in fact, like I mentioned, the private banks are very well placed. If you look at the chart of the Kotak Bank, it has declined from its recent peak of 1420 levels, and from there the stock is already down by 8%, testing its long-term averages. I think it definitely provides a very good high margin of safety. It has a good weekly support close to the levels of 1280. So a stop of 1280 can definitely be placed eventually. One can expect Kotak Bank to rally towards the levels of 1350 odd levels. Yesbank, I have already given a buy recommendation for an upside target of 400. In fact, if you look at the momentum play, Axisbank is in a very good momentum play, specifically after it's seen a good breakout on the weekly charts as it closes above 560 levels. Since quite some time, Axisbank was in a very sideways consolidation and was not able to break decisively above the 565 mark. And this time around, this week, I think with volumes and price confirmation, I think Axisbank is all set to test the levels of 620 to 650 in a medium-term perspective. So definitely, I think going forward, from the private banks, I think one can definitely look at Yesbank, and even Axisbank definitely looks for a good buy.
Okay, the other interesting stock right now is Delta Corp. That is showing tremendous strength in today's day of trade. It's currently trading at around 265, advancing by as much as nearly 8% at this point in time. The volumes have started to come about, specifically in the latter half of the trading session, as you can see here. And while it marginally dipped into the red, and from there ever since we've seen steady gains come through. Currently at 265, just a few weeks ago, it was actually hovering around the 200 mark. So, we certainly have seen good gains come through for Delta Corp at this point in time. Manav, can I come back to you on Delta Corp and your view here? Is it that time now, and has it resumed its uptrend? Would you buy into Delta Corp, or would you be cautious?
This stock, has definitely witnessed a good series of decline from its peak of 400. Definitely, like you mentioned, it did form some important lows and support levels around the 200 mark, and a breakout from a falling wedge pattern. Definitely, at least taking this view for a medium-term perspective, we can definitely looking at the chart perspective. A good medium-term bottom is in place. One can definitely look for another upside of at least 15-20% on the card, since it's bouncing from its deep oversold levels, and the prices are also closing above its long-term averages. Also with confirmation of above average 50-day average volume breakout. So putting all these things in the picture, I sense that this momentum is just breached on the upside, and going forward one can look to buy this, but ideally one can look to buy this on dips. The support area for this stock will be at 240 to 245, so a stop below 240 can be placed, and one can maintain long positions for an upside target of 310 to 330 in the medium term perspective.
Okay, 310 to 330 you can watch out on Delta Corp in the near term. But Amit, wanted to take your view on PVR. The stock's gone up on quite good, or rather high volumes on the cash side. Even the futures have been indicating a lot of fresh long positions which are being taken as the open interest has surged quite significantly. Is the move convincing for you to take a fresh trade on the upside?
See, mean minus 2 sigma level for PVR was placed near 1090. That was very crucial level. I mean, I have not seen this level being breached in the stock, and it has sustained below this in the last many years. So again, this is very important. But I need to see the sustainability actually above this for some time, because it is still, in that particular news scenario, any particular adverse news again can have an impact on the stock. So I will wait and watch. Rather I will look at some other stocks in the market.
Okay, well, there you have it. So a substantial strength coming into PVR, and with that we slip into a short break. But before that, Bloomberg's Francine Lacroix spoke with the Bank of England Governor Mark Carney, and this is what he had to say when it comes to speaking about Brexit. And he did say that they have to be prepared to see the worst version of Brexit. This is a slice of that conversation. Listen in.
I think the important thing is that this is the right decision for the economy given the track that it's on. There's a wide range of Brexit outcomes that are possible, and we all hope that by the end of the year we'll all be much better informed on which path the UK and the EU are taking. In a variety of those potential outcomes, they would be consistent with rates at their current level, if not higher. Certainly there could be circumstances where it would make sense to adjust policy, but I think we'll all know what those circumstances are, and the MPC at that point will take them into account and take a decision.
Why could you not say that actually a disorderly Brexit would automatically mean a rate cut?
Because it doesn't automatically follow. I mean, certainly a set of circumstances like what happened post-referendum, where the balance of what happened to the future supply of the economy, demand, which was more of a business hit than a consumer hit, if you recall at the time, and the exchange rate, the combination of those things made sense for us to extend the horizon over which we brought inflation back to target, support the economy. Fast forward 2 years to today. I would say this, wouldn't I? But it does look like the right call. We've got inflation coming back to target. We've got record employment growth. We've got real wages starting to grow. We're in a better position. But there are circumstances where the balance of those three factors would be too inflationary for the tolerances of the MPC. In the end, we can stretch the horizon, we can support jobs and activity, but up to a limit, and we have to make those judgments at that time.
If there is a hard Brexit or a crashing out or an ugly Brexit, what would happen to the markets?
Well, I mean, the markets will determine. It depends how much the markets have pulled forward that situation, how much they've anticipated. I mean, as with any market event, what I will tell you, go directly to our responsibilities more broadly within the bank, is it's our responsibility to anticipate a very bad version of that cliff edge, disorderly Brexit, what could happen to the markets, how that would affect UK financial institutions that we supervise and regulate, and make sure they have enough capital, enough liquidity, they're on top of the risk management, they've prepared for it. We have done that. We did that with a brutal stress test last year, and they are capitalized for that. And I'm going to be here when it happens, so I'm not, if it happens, I should say. Jeez. As a consequence of that, we have the confidence there. The other set of issues relate to cross-cutting issues in the derivative markets, in insurance markets, having to do with personal data. And for those, we have very clear checklists of who needs to do what and where we are in terms of solving them.
Would you extend your tenure, given that it looks like Brexit won't be finished by the time you leave?
The crunch point really is between now, the crucial period in the negotiations, obviously between now and the end of the year. There needs to be parliamentary approvals by the Brexit date, the 29th of March, the most intense set of issues around Brexit are in that horizon. So as I say, we're going to be here, and in whether it's this central bank, the ECB,
2019 is a hard out.
The other central banks is it's all about there's the team. So look, there's nothing changed on that point.
Okay, so end 2019, no matter what happens, you're out.
It's July 2019.
July 2019.
Yeah.
Talk to me a little bit about some of the market reaction today. So the pound was down. Are they skeptical about your ability to raise rates, or should we not read too much into it?
Well, I mean, I think sort of day trading as a central banker is never a great idea. So I won't read too much into that. I think the important things from the decision today is reiterate the decision. It was appropriate to take rates, and the MPC unified on that. Secondly, that we do see a requirement for a few more rate increases over the next few years to be, if the economy remains on this track, to be consistent with that. Thirdly, and we had an exchange actually at the press conference on this, and I think it bears repeating, which is that I think many in the market recognize this, certainly the view of the Bank of England and the Fed and others, that the equilibrium interest rate globally and in the advanced economy is lower than it was previously. There's also, in the view of the MPC, there is a wedge between that overall level of equilibrium rates and where the equilibrium rate is in the UK. A lot of that is caused by the uncertainty around Brexit, which you just look at what's happening to business investment in this country right now. It should be on fire. It's just moving along, very tentatively moving along. Take away that uncertainty, one would expect, again, using business as an example, that they will adjust quickly to the new realities, investment comes in, and that you start to move up between the equilibrium level in practice in the UK and global rates.
Welcome back. You're still watching Countdown with us on Bloomberg Quint. Just 25 minutes to go from markets to shut shop, and we're at day's high. Not bad at all. 11,356. Banknifty also sitting with gains of over 300 points. Just want to pull up the European market indices and check what they're doing in trade today. It's been a positive start, however. Okay, the start has been sustained. There's still all the three key indices. FTSE, CAC and DAX, all of them are sitting with some bit of gains. But back home, we just got a few numbers a while back. I want to pull up National Fertilizer. The stocks inched higher post the numbers have come by. The margins are at 6.8 versus 4.4%. The net profit for the quarter was 41 versus 25, which was seen in the corresponding quarter. So operationally, it's looking like a great quarter. And even on the top line front, we've seen some bit of growth coming by. But clearly, EBITDA 147 versus 83. It's been a good operationally. It's been an operationally good quarter for National Fertilizer, hence the reason we're seeing that uptick coming in on the stock. Amit, on the charts, the move that we've seen post the numbers, any sort of levels that you would like to share with us on the upside? Amit, that's for you. National Fertilizer.
Oh, this is for me?
Yes, Amit.
No, actually we don't track this stock because actually I mean, this is not an F&O, and particularly if you ask me about the fertilizer space, I think we are looking at GSFC. Now GSFC, because it has come down to 100 rupees, and close to this, I think a very strong support area is there for this particular stock. It had come down from 160 to 100, so almost 60% decline we had seen in the stock. It holds 20% stake in GNFC, and our sense is GNFC has more beta, so that beta should come back in GSFC now. So if you ask me from the fertilizer space, from the F&O front, then we recommend GSFC actually right now.
Okay, Amit, hold that thought. Let's find out about some of the stocks that are made on Nikki Mirchandani's list of Fab 4 this afternoon. Nikki, what do you have on your list?
Hi Agam, I'm going to start off with PVR. That is a stock that needs a mention out here. The company has extended its contract with a Paytm for a period and Book My Show for a period of 3 years. Now IDBI Capital says it's going to be a positive development for the company, both in terms of EBITDA, EPS accretive, and also is going to be reducing the debt of the company with the upfront payment. Next on the list we have torntpharma, which was also the stock of the day. Strong commentary there, also strong Q1 numbers, and the management commentary, interestingly, it was interesting. If you look at the top line growth of 30% there, and EBITDA we saw a 60% growth, beating estimates. Moreover, the management suggested that the price erosion for most of its products, it's over, and they can look at a sequential uptick in its US sales numbers. Next in the list we have Reliance Communication there, where the top court has allowed the company's sale to Jio, which is going to be a positive development, and also there was a block deal which happened in the counter, because of which the stock is trading quite higher. And last in our list is VIP Industries, on back of good set of numbers reported by the company. We have seen a good 30% uptake on the top line front, and we have seen in terms of EBITDA a 57% jump out there. Reacting on back of that development, we're seeing VIP Industries trading higher.
Okay, Nikki, thanks a lot for bringing those Fab 4 stocks of the day. But I'm going to take Torrent Pharma ahead. If you could just pull up the future plate of that one. I remember we highlighted that stock for you, though the numbers, it's definitely reacting to the numbers, and there's a lot of long positions being seen. Look at that, open interest is up nearly 60%. Manav, if I could come to you on Torrent Pharma on the charts, let's say if somebody took long positions here, would you advise them to book profits today, or they should hold on their positions for next week?
When we're looking at this chart, at least on a medium-term perspective, there has been a breakout after good 6 to 8 months of consolidation, and a breakout which is led by good positive news, confirmation and volume. I sense there's no point booking out profits that early, because looking at the overall trend indication, I think the stock is all set to exceed its all-time highs of 1770 levels, and even exceed above that. One should definitely hold on to their long positions and given a chance, someone who also wants to enter, I think in any level close to 1550, which is an important weekly support, should be initiated. And overall, this stock is definitely a buy and hold on dips.
Okay, there you have it. That's the view on Torrent Pharma, which is showing a lot of strength today, but we'll get in another fundamental voice. At this point in time, we have market expert Anand Tandon joining us this afternoon. Anand, good afternoon. Thank you for joining us. What are you making of the market cues at this point in time? Well, it seems like the benchmarks are continuing to advance. What is your view on these large caps specifically?
Well, they continue to, as you said, advance to newer highs. At the same time, the valuations continue to remain reasonably aggressive. So, we need to have some reason for the market to turn. Right now, it is not finding it. And it's clearly showing that, the direction that it's more comfortable going on is on the upside.
Okay, Anand, we just had numbers of Titan, Nestle coming by a while back, and by now we've seen the numbers from the entire FMCG pack as well. Any thoughts? Volume growth has been a standout, which has been aided because of the recovery in the rural market. But specifically, if you could tell us, Titan, the expectation was not so good because of the quarterly update which was given by the management. But I think some bit of profit booking definitely kicked in, but the numbers didn't look that bad.
Well, I think in general, the theme for consumption continues to remain very strong. And as you mentioned, most companies have reported numbers which are not showing any signs of slowdown at all. There is no doubt that given the kind of government spend that we are going to see in rural India in this current year, the consumption is likely to get supported. The only issue is that, is there a specific area which is looking a little less expensive? Because most consumer-facing companies are actually very, very expensive, whether they are FMCG, consumer discretionary, or for that matter, banking and financial services, which are consumer-facing. So as a theme, so long as the growth continues, I don't see that there will be any major disruption. But finding value there is amongst game. You basically have to go for wherever there is most aggressive growth, and growth is coming from almost all segments in the consumer space. For example, the QSR segment has been an outstanding kind of growth number, almost mind-boggling and unbelievable.
All right, Anand. So I'm assuming it's fair to say that if you're holding some of these consumption names, you continue to hold on to them. But would it also be fair to say that you wouldn't add more positions to any of these consumption names at this point in time?
Well, if you are a fund and getting fresh money in, I don't think you have a choice. But the only thing you can say is that, you buy something which has fallen out of favor. So typically, if the results are slightly out of line, and the market reacts negatively, it would be a good time to get in, because the assumption would be that, sooner or later, and probably sooner rather than later, the growth numbers will resume, unless there is a specific case of a particular company messing up, for any particular reason. I mean, even things like cigarettes, for example, which for most people, the expectation were that the volume growth will be kind of flattish, has turned out to be a positive growth, and in terms of some of the smaller companies is almost a double-digit growth. So it does look like, everything that is available for consumption is being consumed.
Would you draw a parallel with the private sector banking names, which have also started to see a pickup in terms of price action right now?
Well, the clear case of, as I mentioned, financials is also something which is driving the consumption. And therefore, to that extent, the market has recognized this a long time back and has been pricing most of these companies, to reflect that kind of growth. The current market action, I think, as I said, is just simply a question of money chasing the stocks. Will you find any reason not to be buying Kotak or HDFC? Yes, they have performed, perhaps shown a little bit more stress than they are used to. But they are high quality banks and have, over a longer period, shown their ability to continue to grow and grow very profitably. So aside from the valuation, there is absolutely nothing that you have to worry about in these banks. Valuations for the whole market is expensive. So, there is no point in saying, okay, this particular company or sector is looking extremely expensive, because almost anything which is worth buying has been bought and more, and anything which is not worth buying is anyway not performing.
Okay. Just want to address a stock which is likely to enter into the F&O ban period for Monday's trade. Pull up Jet Airways. There's been aggressive shorting which has come in that counter in today's trading session. In fact, if you look at the total open interest as a percentage of market-wide position limit yesterday was 85, and today's data on the futures as well as a couple of option strikes suggests that it is likely to breach the 95% mark, which is required for a stock to enter into the F&O ban. For futures, open interest is up nearly 25%. As we can see, the stock's down almost 7 to 8% in today's trading session. Very quickly, Amit, do you think Jet Airways continues to be a good shorting candidate?
No, I don't think so. I think, most of the thing is priced in, and it is in ban, so it is not good to comment on this. But once it is out of ban, there may be a possibility of some recovery just because of short covering. It has gone through a lot of news flows right now. So it's it's better to avoid this rather than, shorting again at these levels.
Okay, I'm going to stick to the aviation company and quickly take view on Interglobe Aviation as well. Manav, your view on this one, what would you do with Interglobe Aviation at this time?
We've already seen a good decline already coming into the stock. It is bouncing from its deep oversold levels, and it has also breached its very short-term resistance. The overall trend definitely remains bearish, and we have witnessed some selling pressure coming into the stock. So at the moment, I would just take this view only, playing it for a very short-term, counter trend move, whereby you might find resistance up to the levels of 1020. But unless we don't break above 1050 on the weekly perspective, I don't sense any fresh longs to be added. But at the moment, it's better to avoid this counter, because when we are looking at the charts of the crude, crude has also reached its crucial support zone. Eventually, a short-term bounce back is also likely from there on. So I sense aviation as a space one should avoid taking any short-term trades unless there is a clarity at least for a trend reversal.
Okay, avoid coming through when it comes to the entire aviation pack. But it's time to take a look at what the dealing rooms are recommending at this point in time. And we have Yatin Mota, who's joining us to give us an idea about what's going on. Yatin, over to you.
Good afternoon, Agam. We have, Titan, they have come out with the quarterly earnings, but post the earnings, dealers are indicating that domestic funds are said to be sellers in the name. Probably that is the reason why the stock has corrected almost, 20-30 rupees from the day's high. So Titan is one stock wherein dealers expect the weakness to continue, especially with the fact that we had the jewelry sales growth coming in at 5.6% versus the street expectation of, close to 8 to 10%. In some cases it was 12%. So, probably that is something, a pain point on the stock. PSU banks, SBI and PNB, dealers do indicate a buy here. The trend in the PSU banks, the kind of short covering that the dealers are talking about in the future and option segment, probably, make a case for further upside. So dealers are, in general bullish on PSU bank, especially the likes of SBI as well as PNB. And finally, do watch out for Jubilant FoodWorks. This is one stock, almost 3% up, but promoters have created fresh pledge shares, and dealers do indicate that, moving forward, there could be overhang of, additional pledge shares or promoters selling shares in the market. So, this is one stock wherein dealers are expecting some bit of weakness in next week based on, a positional trade.
Okay, Yatin, thanks a lot for bringing the dealing room check for us. There are some important flashes there on your screen. Some clarification coming in from Jet Airways on report of can't fly beyond 60 days. The management has informed the stock exchanges saying that this report seems to be incorrect. So there's no truth in it. Remember, this morning we told you that Economic Times paper and also some bit of reports in Mint paper said that the company cannot fly beyond 60 days, and they've also asked their employees to take a pay cut of nearly 25% as they have been undertaking cost-cutting measures in the recent past. So currently, the management seems to be denying the news, but let's see if there is any sort of reaction that the stock is seeing. Just mild bit. They've also said that they've been in talks with stakeholders on the challenges that currently the company is facing. Okay, it's down almost 62 to 63% for the year. Clearly, Jet Airways has not seen good days in the recent past, at least. One factor could also be the ATF prices moving higher. But Anand, I want to talk about a pack which we usually don't talk about, and that's the paper space. The numbers this time around have actually surprised the street. You've got something like JK Paper, which has been moving higher. The numbers were pretty good. The stock's also seen gains of nearly 25 to 26% for the week. What have you made of the numbers so far? Which have come by? Do you see any investment opportunity in this sector? Because so far in the last 2 to 3 years, if I were to see the stock prices, how they have performed, we've not seen any good returns coming from this sector.
We have had, the largest of the lot doing very badly, which is the Ballarpur company. Paper, like most commodities, is extremely cyclical. Of course, right now the cycle looks like it's on the way up and has been for a little while. So it's not surprising that many of the companies will actually report good numbers. So those which have been able to manage their balance sheet, like JK, like TNPL and so on, and have no problems with either procuring raw material or with water, two of the crucial components, will obviously do quite well. It's a very capital intensive industry, and therefore it's not as if capacity will come up immediately. One does expect to see some of the mothballed plants coming back into action. But I think for the near term, at least, specialty paper is something that will continue to show reasonably robust results.
Okay, Anand, I want to go back to financials. Are you drawing a distinction between the large cap NBFCs such as HDFC and the Bajaj Fin Twins against the relatively smaller ones which still really haven't caught up as much as in comparison to the kind of strength that we've seen in the large NBFCs? How would you approach this sector?
Well, see, if you are so broadly, you have to look at the NBFCs as to which area they are in. So if you talk about HDFC or a housing finance, clearly the NIM pressures other than for HDFC will be probably the highest there, because their borrowing costs are likely to be moving up, given what we are seeing on the interest rate scenario. And it's the most highly competitive area because it's also perhaps one of the most secure. All in all, that's a space where you would expect to see some margin pressure. But broadly, what has happened is that because of the PSU banks not being in a position to lend, almost everything that is in the private sector has actually done quite well because they've had a huge lending space to be able to continue to lend and grow. Housing finance is the safest. The extreme other end, of course, is the microfinance business or the SME finance, which is now becoming very popular. And one would argue that for the next few years, it looks like if the economy remains reasonably robust, the SME finance space will become a fairly large part of the lending portfolio. And therefore, banks and NBFCs focused on that area will likely do well. That is probably one of the few spaces in the banking and financial space which is not very expensive. If you look at most of the mid-sized banks which are lending to SMEs, they are still coming out of a bad phase because the economy was doing badly. And going forward, it does look like the growth rates can actually resume. So NBFCs, if you have to look at investing today, I would argue that you should be focused only on those which are lending to the SMEs to the exclusion of almost everything else.
All right. That's the view coming in on the NBFC space. Just under 10 minutes to go for markets to close. Let's get you some closing strategies from our technical experts. Manav, coming to you. Any BTST or STBT?
Yes, I have two buy calls. My first call is buy on BEL. The stock has already witnessed a very good bounce from its oversold levels, and after a couple of days of consolidation, it's witnessing a breakout on the intraday charts, and the breakout is also accompanied by above average volume. So I sense in the near term perspective there'll be a good follow-on moves. Stop of 114 on the lower side for an upside target of 123, and eventually I see BEL even testing the levels of 130 in the medium term perspective. My second buy call will be on KPIT. It's a purely momentum call. The stock has been on a very good uptrend and has held its important support zone. A move from its intraday support levels and a break on the volumes indicates a good move on the upside. A stop of 301 on the intraday basis, and can expect a positional upside move towards the levels of 316.
Okay, Amit, how about you? What any trading ideas that look interesting to you at this point in time?
Yeah, I think from the mid-cap space, Berger Paint and Mahindra Finance, these two stocks one can look at. Now, Berger Paint, it has been, around 300 levels for quite some time. In fact, this stock for the last 1 year, the basic range for the stock was 240 to almost 280. It is giving a breakout. In fact, it has already given the breakout. Now, if you look at the open interest position, despite reaching the life highs, the open interest is pretty lower. So leverage is very low actually in the stock. That means the people are still skeptical, and that is what leading the upsides, I think, because they tried to go short and finally it moved up, then that short covering came. So if the fresh longs, now in this particular series, we have already started seeing almost 15% of addition in the long side. So my feel is there is lot of room for these longs to get added in the stock at these levels, which can take it higher towards 345 or 350 levels. So it can be a good buy, considering the fact that Asian Paints had already run up and then that is sideways. So this is another one which was laggard and can pick up. Now Mahindra Finance, I think there are certain stocks from the finance space which have started recovering. Now we have seen L&T Finance recover towards 180. So M&M Finance was basically the outperformer performing stock among all, and now once it is above around 500, the recent results are also out, which was also not very disappointing. The stock held above 500 levels. So I think this is one stock where the longs have been rolled from the last series to the current series, and it is very much possible it can move towards 550. So just keep a long actually in this for the coming weeks. It can give you good money.
Okay, those are some technical closing strategies coming in from our experts. And Anand, before we let you go, any space that's looking exciting to you at current levels?
Well, there are, the mid-cap market has obviously turned back up again. And there are still many of them which are way below where they were, let's say, just 2 months ago. So I think if the market were to sustain and the mid-cap rally were to continue, you'd find a lot of opportunities there. It's difficult to pinpoint, it's a very large sector, but there are enough space, for example, in construction and cement, even in defense areas and so on. And the SME finance space. So there are a wide variety of stocks that one can choose from in many of these areas.
Okay, Anand, we'll let you go on that one. Thank you so much for joining us this afternoon and taking us through your views on the markets.
Thank you.
And with that, I'm going to address yet another stock from the financial space. Let's pull up Edelweiss as well and see where it's currently trading at. Edelweiss, of course, was also around the levels of around 280 just last week and has moved in tandem with the rest of the mid caps. So we do see some recovery here as well. Of course, it's an institutional favorite, and we see a lot of traction in this one as well. Okay, Manav, can I come to you on Edelweiss and take your view on this one? It's currently at 314. More upside?
Yes, absolutely. The stock has also breached its falling trend line drawn from its recent highs after it also confirms and validates the bullish setup. And if we look at the chart, the prices also formed a double bottom recently near its long-term averages. We can definitely conclude saying that the recent low has been formed and eventually the prices would be testing and moving towards its all-time highs. The momentum for this stock is very good. In fact, on the daily perspective, since quite like 2-3 years, the stock has not breached below its long-term averages, so which definitely talks about its trend. So on the immediate basis, 300 can be a positional stop loss or a trail stop loss for anybody holding long positions. Eventually expect the prices to test the levels of 340, and once if it breaks that, even the levels of 375 are on cards.
Okay, just want to address few stocks before we wrap the markets today. There are some stocks moving around, and especially from the textile space. Pull up Indo Count, that's up 9% in trade. You've also got Trident, that's moved up 7%, and also VIP. The numbers had come in, but remember the stock moves are just coming up now, and these are all textile counters for you. VIP up 8% in trade, Indo Count up 9%, and Trident also surging at day's high, going up in the last few minutes of trade. But just 2 minutes to go for markets to close. So let's head across to Agam to find out how exactly today's closing is panning out. And Agam, looks like a good close to the week. We're closing almost at day's high levels.
Yes, we are. It's turned out to be a good session. It's certainly turning out to be a good end to the trading week, with both the benchmark indices advancing by over 1%. So strength coming through for the Nifty as well as the Sensex. We are likely to see the Sensex close about 37,500. Nifty comfortably above the mark of 11,350. Of course, the Nifty banking index is the one which is actually lending strength in today's day of trade on the back of several banking counters, and I'm going to talk about them in just a little bit, but for now we're seeing strength in banking as well. Broader markets, well, the mid-cap indices advancing, the small-cap index actually outperforming the major indices, up by as much as 1.4%. Of course, let's not forget the BSE 500 index also advancing by as much as 1%. So gains all around in the markets, and most stocks moving in tandem with the major indices that we are focusing on today's day of trade. Let's take a look at some of these stocks then. When it comes to the major indices, Indiabulls Housing Finance right at the top, reacting to earnings. Axisbank and Yesbank are also in the top list, along with ICICI Bank, all advancing quite considerably. In fact, Axis Bank up as much as 5%, and it's actually gained strength in the last half an hour of trade, with Vedanta, GAIL and HDFC also. But as you can see, among the top gainers on the Nifty at this point in time, majority of them belonging to the financial space. On the losing end, some weakness in Tech Mahindra, in Tata Motors along with Grasim, but otherwise not too much to speak for. Even the ones which are losing out just a little over 1%. So it's certainly safe to say it's turning out to be a very good day of trade today, Navneet.
Right, Agam, and the rally was seen across the board where benchmarks were up. You also had good gains seen for the broader market indices. Let me highlight a couple of stocks. Vanke's, which was locked in upper circuit yesterday with gains of 20%. Remember, it came out of the ASM, and today also it had a gap up opening and finally closing also with gains of 18%. Inox Leisure and as well as PBR, both these stocks went up in trade. There was news related to PBR that they've renewed their contract for the next 3 years with Book My Show as well as Paytm. On back of that news, we saw good gains coming in for PBR, which saw fresh long positions on the future side, and also I think there was a rub-off effect seen for Inox Leisure that was up nearly 14 to 15%. National Fertilizer came out with the numbers in last hour of trade, and the numbers look pretty good, especially the operating performance. The margins were at 6.8 versus 4.4, and hence the reason, as you can see, the intraday chart's going to tell you when the numbers came, the stock went up and finally closing the day with gains of 11%. The other company which came out with the numbers in the second half just an hour back was Zydus Wellness from the pharma pack. It touched its 52-week high post the numbers came about, and the top line was up 13% for the quarter. 6.5% are the gains that we are seeing. And you also had Cummins that was doing pretty well in today's trade. In fact, on the future side, we did see some position. We spoke to some technical analysts who were also sounding quite bullish, and this one 7% higher. Torntpharma reacting to numbers, good operating performance, margins expanded to nearly 25.5 versus 22%. So these are a couple of gainers from the broader markets. But on the losing side, you had Jet Airways, despite of the clarification that you got in the last half an hour of trade. Fresh shorting continued for this one, closing with cuts of 7%. And numbers from Nestle came in, profits at 395. Looks like there was some bit of profit booking which kicked in as the stock's trading around its all-time high levels. It also at higher valuations. Chennai Petro is the other one which saw some bit of weakness, and Ramco Cement, where the profits fell for the current quarter, also saw some bit of weakness coming about. That's closing with cuts of 2%, Agam.
Right, so if we bring up the intraday chart of the Nifty, you'll see that it's actually closed at day's highs, and there you have it at around 11,360 odd levels, up another 1%, and it's the same for the Sensex. But I'm curious about the Nifty banking index and see where that has been, because that's where the real strength has come. That's where we've had that impetus come through on the major indices as well at around 27,695. We were talking to a lot of these futures and options analysts too, and a lot of them did have longs building in. That's played out very well in today's day of trade. Let's bring in the contributors to the Nifty 50 then, and well, no prizes for guessing. It's the financial space which has led the gains largely. HDFC Limited, Axisbank and ICICI Bank. Surprisingly, HDFC Bank is on the losing end. Well, some weakness in Tata Motors and Tech Mahindra, but we really haven't seen any correction, considering both these stocks were losing at less than 1% in today's day of trade. And with the advanced decline ratio, I reckon, Navneet, will also be positively poised. Yes.
Yeah, and throughout the session, actually, the market breadth was quite positive, and we maintain that. That's quite a positive sign that we saw in today. In fact, the market breadth has been improving if you look at throughout the week. But let's just pull up the Nifty 50 stocks for the week and see which were the stocks that gained the most or also lost the most. So this is there are a few. Dr. Reddy's Laboratories right on top, 9% higher for the week, and also from the pharma pack. Actually, pharma stocks were doing pretty well. So Lupin also up for the week, 8.5%. Coal India is the other one. HUL is also up. Sun Pharma again from the pharma pack, and Indiabulls Housing Finance, which reacted positively today to the numbers, and also two heavyweights, State Bank of India and ICICI Bank, were up for the week. On the losing side, you had Tata Motors, Eicher Motors. Tata Motors obviously on back of numbers, and your heavyweights, both the HDFC twins, were down for the week. L&T is the other one, alongside something like Bajaj Finance and Maruti Suzuki, which were down almost between 1 to 2% for the week. And again, we'll have one more stock from the HDFC lot being listed on Monday, HDFC AMC. I'm sure the market will be looking forward to that. But lastly, I just want to pull up the participation for today and see what was the turnover like. Yesterday was higher. Reason being, okay, we've got something else. This is the mid-cap.
Mid-cap, yeah.
Okay. let's address this. We can go back to that. The total turnover for the day is 5 lakh crore. On the cash side, it's slightly higher than yesterday. It was 31,000 for NSE. It's 32,500. NSE F&O turnover has dipped. Reason being, yesterday it was on the higher side because of the weekly option expiry from the Banknifty. But we can pull up the previous plate of the mid-cap index, how that performed, Agam.
Well, there you have it. This Aditya Birla Fashion came up with strong earnings, and that's the reason why you're seeing that up more around 22%. Adani Power, of course, we've seen some volatility, some recovery now. Dilip Bilkon among the stocks which moved out of the ASM list, and there you have it, that impetus coming through, and thereby you see Dilip Bilkon moving higher as well. Vakrangi and PC Jewelers are the unusual ones on the list, right at the top of some of these gainers in the mid-cap space, and Mahanagar Gas, of course, also coming up higher. Quest Corp, surprisingly, profit-taking after its numbers came through. We're seeing some weakness there. PNB Housing Finance and Jubilant Life Sciences. Otherwise, not too much to speak for. The momentum in the broader markets, as we have seen in all the mid-cap indices, has been towards the positive, and that explains this slide as well going in.
Okay, that's about the weekly performance of a couple of stocks, but let's get some closing thoughts going from our technical experts. Manav, let me come to you first. I think once again we're inching towards the all-time high levels in Nifty of 11,390. How would you approach the trade next week on Monday?
I think this strategy will be like, as long as the markets hold the levels of 11,200, we will continue to remain positive for the short-term perspective. The medium-term trend definitely is intact. For the short-term basis, I think 11,200 is our positional stop loss. So we continue to remain a positive bias for an upside target of 11,500. Coming for the next week, I think the pharma space would be the index that we are eyeing very closely. We've already seen a very good reversal happen on the higher time frame charts after a good precedent decline from its all-time high. So, pharma as a space is getting into a momentum, specifically stocks like Cipla, Glenmark and Dr. Reddy from its oversold levels. I think pharma could witness another rally of 10 to 15% on a very short-term perspective. So this is a sector that one can eye for a short-term momentum play.
Amit, your closing thoughts for the day and the week. We have seen the Nifty now close at 11,360. What do you make of it?
So this has been a week where Nifty has hovered around 11,300 levels. And I think eventually it is forming a good base scenario above 11,000, which is quite encouraging. And I think on the higher side, it should hit 11,500 or 600 levels very soon. So this trend is definitely on. There may be certain heavyweights which have not performed so far. They can start participating. For example, L&T has not performed so far. Now ITC has also remained near 300. Now that moved up from 270 or 275 to 300 levels. So there is enough steam left in these stocks to start performing from here. So I'm waiting for that. If they start, it will be a really broad scenario for the heavyweights per se. Now for the mid caps, that trend has already started. I think like the PSU banking, which was the most underperforming one, which has started performing in this market, and that trend may continue because the yields have come down after the monetary policy rather than moving up. The interest rate hike was very much factored, and till December we are not expecting another rate hike. So in that scenario, there may be a good platform for PSU banking or other underperforming private banking stocks to start moving on. So I think it is a good theme for these stocks where the alpha to catch up is very high. So in that case, one can start building up their portfolios in these stocks, at least for a month or a 2-month perspective.
All right, gentlemen, Amit as well as Manav, we leave it at that note. Appreciate both of you joining today and taking us through your technical views on the markets. Good weekend to both of you. Okay, with that, it's a wrap on this edition of Countdown. Goodbye from Agam and my side. Thanks a lot for watching the show, but don't go anywhere. There's lots lined up on the other side on Bloomberg Quint. Stay tuned.